everybody, this is John and welcome to the free video. Quite a day here in the stock indexes, of course, after the big down day on Friday. We had a little bit of an air bounce, vacuum bounce on Monday, and then today, bam, the volatility is coming through. So when the volatility like this picks up, and I always look at the volatility as a measure of obviously kind of the average daily range, but it could also be looked at, also viewed it via the VIX. The idea with this is to start cutting position size in half, okay? And widening stops. And think of it this way: when the trading range doubles, okay, and if you're using the same size and the same size stops, you're just going to get stopped out more. So I know, like in 2011, there's that period of time where we had that massive sell-off, and then in 2008, we'd cut position size down by 3/4, and in some cases 4/5. Yet in many cases, on say one contract, we were making more money than prior when we were trading on like 10 contracts. Okay, so that's kind of the secret to survival when things like that happen. Now for tomorrow, so Tuesday today, we got a high reading here in the TRIN. When this happens, when we close over 2.0, okay, which has only happened a couple times this year and a couple times last year, that's an extreme overbought condition, okay, or sorry, oversold. So overbought is down here. But when you get an extreme oversold condition, in this case, it's legitimate that the market actually tends to bounce the next day, okay? So for today, of course, the markets had a ton of selling. A lot of it was in the NASDAQ, a lot of it, and then of course in the S&Ps. But with that high TRIN reading, we look for initially in the morning. So the two things that usually happen: one, if we're up right away, usually we'll get some strength and then roll over, okay? What would be a little bit better is if we gap down, flush out the last of the longs, and then rip it higher. But generally on something like this, we're looking for kind of a one-day bout of strength, and then the market can go back to doing what it's going to do. And this is the kind of stuff that you want to be on top of, because these signals don't happen very much, and when they do happen, they are very, very powerful. So although unfortunately you can't trade options on the TRIN, you can use that, and toward the end of the day on something like this, you can do things like sell put credit spreads at the close. So as the Netflix here was getting killed and the TRIN went over 2, then toward the end of the day sold an at-the-money put credit spread for $2.12. So it's about a 1.25 to 1 risk-to-reward ratio. So even if Netflix dies tomorrow, it's still very manageable, okay? But the idea then is that with this high TRIN rating, Netflix at least stabilizes and bounces a little bit, and then of course the premium expansion of this just collapses here, and we just kind of take that money. You don't even look for it to expire worthless. Even just selling it at $2 and buying it back at $1 and something like this is quite reasonable, okay? And then another one here too on Google. So kind of the same idea. Yes, it had been falling all day. In this case, selling something a little bit further out of the money, going out, giving it till next week, with the idea with that high TRIN reading will at least stabilize for a day or two and potentially even bounce. And of course, we just, sell it for $1.50, buy it back at 75 cents. Fairly low risk, yet very high probability trade. And of course, can also buy some calls on the spiders and things like that. So this is the kind of environment as the volatility increases, and I'm actually expecting it to increase through most of 2015. In fact, brokerage firms are even preparing for this, is membership in a live environment. So this simpleroptions.com/gold, this is for our gold membership room, where we've got live options trading and also text alerts as to what we're doing. If you haven't heard, Don Kaufman from TD Ameritrade / Thinkorswim has actually joined us full time. He is also in the trading room, and this was done on good graces with TD. No hard feelings. This is something that we talked to them about, and thought it would be a good move for both of us. And this is something that at this point we still have got it at $147 a month. And we're going to be doing not only education in the trading room, but with all the volatility coming up, we haven't seen a big sell-off since 2011, and then of course before that, we had the financial crisis, and a lot of people, I don't think in this market, don't even know how to trade it, and it's important to not only be able to know how to do that, but to be able to kind of capitalize it and still do this, get consistency no matter what the markets they're throwing at you, and they're getting ready to get more volatile. All right. Hope it helps. You guys have a good rest of the day, and we'll see you at the next update.